All right, guys, welcome. As I promised, I'll do the aftermath. I'm just going to do a quick one, come to you again to look at the news after the fact of what's happened. So I won't take too long. I actually start straight away. All right. If some of you guys watch this as a recording, then that's useful for you so that we can go through what we've got going on. Anyway, let's have a look at what's happened. So now that the news has come out, it's been about almost an hour. So most of any volatility that was supposed to happen has probably happened already. All right. Today, it looks like we have a reaction the other way. Now, this same reaction is also an induction of the weekly low, which is not too far across. I guess if I stretch this line here like this, then this is what we have going on at the moment. Now, I still believe that the dollar is still bearish for a little while before we have the bullish run I'm expecting. We had the perfect reaction. Price broke above here, came back, pushed down here. All right. Now, it was like when the market was bouncing near this low, okay, it was kind of a situation where it could have actually gone either way. All right. Now, there's always a definiteness that you should have with analysis, but there's also a point where you could have an either or situation. And what I mean by that is if I zoom in, just give me a second. If I zoom in over here, these two lows were equal lows or relatively equal lows, almost the same. If I take the low of number, this H4 candle here, that's 744, 101,744. All right, the low here, sorry, the low is 101,587. This is 101,586. So there's one pip, they're 1 pip apart or 1 micro pip apart. So basically equal lows, they just don't have exactly the same price point. Now that could have signaled a few things. First thing I want to kind of recount on or recap over is this. So this is the lowest down demand order block here that the price has, right? This range here of demand. And what we had yesterday, this is yesterday's price action, 21st. Okay, this is the 5 p.m. UK time candle. So the close of the market at 9. We had a strong break beneath here in the last 4 hours of the day. So if you can imagine what's going on here, if I superimpose this here, this area here would become a flip zone, right? Because the price to a significant beneath and come to the other side. So when the price kind of started to hover beneath it, which the price spiked to the other side and the expectation, the price, right? And this is key here. This wick down here means that when the market opened, it made a high. It also made a low, which was beneath this low. So it looked but when this 4-hour candle closed, it closed with a wick closure instead of a B. Now, if this H4 candle had closed with the body of the candle, then today would have been a different story. We would have had a weaker dollar and prices would have been pushing down. But we closed with a wick here. Now it became a reversal situation, which is what we have on this. So in this situation here, I guess one of the best things that could have happened was to wait for that confirmation here, wait for that H4 close of the body. So if this caught you out today and you took a loss, like I took a few losses today, then my suggestion to you is to pay attention to that, this kind of body close versus wick close closure paradigm here. And from that, you would have been able to notice what's going on immediately. Because this candle right here was a decision candle in the sense that, now not the same way that people teach, but this was a candle that how the price closes and opens and etc. was going to be a deciding factor whether the dollar would push further along or would actually continue short. Okay, so I just want to bring that to your attention first, right? Now, after that, you can see right now in this H4 session, which started at 1, ends at 5 o'clock. Price is seemingly breaking above here. And if it is, then what would happen is that price would go to the next available flip zone, right? Which would be here. Okay. Now with this one, it is actually quite convincing if the price does go here, because now this green line is not really visible. I'll probably have to make it darker. So let's just go for a deep blue, right? Over here, we have a H4 validation point / FVG over here. And we've just one over here, and it seems like the price is not really paying attention to it too much. Now, because it's the H4, you can give it the benefit of the doubt. It won't be the strongest ones, all right? But there is one that we've already come to, and then we have another one that the price has done. And these two candles going bearish here does represent like a liquidity void. So if the price wanted to fill it out, it could. Now back to the D1 with the dollar index. So the actual trigger point when the price touched at this level here is this induction here. So on here, let me just drag it out more. When that induction took off, as it should, rightly so, we had the induction afterwards. Now the supply zone or the body works out to be a really good supply zone, and it might be that the fact that the price is trying to look for supply before it takes off, all right? To the left here, because the price is already closed beneath here, we can actually ignore this price level here. Unless when the price comes to the other side, the body closes beneath here and it acts almost like a demand flip zone, and it closes here with the body of the candle, then that will be another trigger short, okay? Now, anyway, now that the price has done this, I believe the price is looking for supply, which is why the rush for a push is so strong. Now, the other side to the story, which we talked about this afternoon, is this area here. So I'm going to take this line off as it is for now and just use this to represent what I was talking about, right? That zone. This is the extreme H1 demand flip zone. So I'll put that in this color up here by itself, right? And then this is the reaction here, the induction. I call it a stop on, right? And so if we take the high to the low, we can map out what's going on. So we had an accumulation here first, spike back here, then we had the sell, right? If I go over here, now I'm supposed to get Fibonacci. So here we go. If we go over here now, the price is coming to that supply zone that I said is a key one. So right now, the market has just peaked above equilibrium right now. Okay, we're just above equilibrium, just above. Now, what within the equilibrium, we're in another equilibrium, which is the daily one, taking into consideration this big monthly range. Equilibrium is here. So there's two equilibriums going on at the same time, all right? And that's where we are right now. So you can see there's another equilibrium right over here. So what my thoughts are is that we may actually not see the price go all the way here too, because again, right here is a supply zone with the equilibrium point laid out. And the price could very easily, just from here, being at two major equilibrium points, one on this shorter time frame trend, and then one being exactly on the equilibrium of the higher time frame monthly trend, and just give us a short straight like that. Okay, this is what can happen. To go for a short, but it depends how the price closes. Now, this H1 candle is closing in 5 minutes, providing that the body stays within this range. Now, this is a small body, so looking at the midpoint here, as long as the price can close within the midpoint, within this session, then that will be great. If it doesn't, then probably it will push higher, especially if it's closing near the edge of the zone. Now, in a few instances, the price will close at the edge and still go short, but it will have to really, be dependent on what's going on with everything else. Okay, but I'm watching it carefully to see what happens and how the price behaves. But it's actually come to this kind of target area here. Now, if we want to correlate that, let's look at what's going on with other pairs. So again, my initial trade I had here, the price has stayed in the order block, but spiked down beneath the first low created here in the London session and made a lower low. Now, I wouldn't say, I don't know if that's the trigger for the buy. It may actually be. Okay. I'm done for the day for the amount of risk I've taken. I don't want to take anymore. All right. But, looking at some of the pairs we're looking at now, I'll go from back to front. USD JPY, the trade idea I had, the trade plan, it worked out to at some degree, but now the price is really going extremely far away from the highs. Now, there is another high over here, an extreme high at not too far from the 252 or 251. This is at 481. Okay, so 481. Yeah, 481 here. So on the H4, H1, it looks pretty clear that USD/JPY wants to go short. Now, I'm saying that, but if, and this is pretty rare, but it can happen, if the price was to close and shoot down straight back down, let's say the dollar starts to get weak right now, and we have a close where USD/JPY decides to close beneath this low, and even more importantly, decides to close beneath the low of the week and still end the week with a week instead of a body close above, then the price will pull back down short. Now that is a far way to go, because considering where the last week's high is over here. The price would have to do an 81 pip reversal before Friday ends for it to still be considered a weekly reversal. All right, but so far the USD/JPY is just, pushing up for a long. USD CAD this week hasn't actually moved much. I thought that was the daily time frame, but it's actually the weekly. On the H4, there's not been that much movement. But remember what I've told you guys, that we're looking for the market to get into this area before we look for some loans. Maybe it might go a bit deeper because there's a little gap down here, but I'm looking for that buy from this last impulse move for USD CAD. All right, D1, H4, H1, and stuff. So on the H4, it's pretty clear we have one more week left because we've had a strong close beneath the low of last week. And that's where the price is kind of wicked to right now. All right, to the T. So that last wick here, the price came back to this high and matched the price here, right? Or reprice. Now on the 30-minute and stuff, it's pretty noisy. Price is long and short. He doesn't know which one he wants to do. Straighten this out. I think the easiest move that could actually probably happen for tomorrow, even if USD CAD now there's a supply zone here, which is a key supply zone that the price is using on the 30-minute, right? And because this is one of the last candles before the price broke beneath, you could actually see it as a flip zone. If I took the H1 demand zone here and I just drag that along too, like this, and then after I map the 30-minute supply zone here, it gives you a pretty nice range to look at. So the price is wicked into the other side, which is good. On the 30-minute, there's a supply zone, which is in the midpoint range of this bigger H1 zone. So what does that mean? It means that, well, tomorrow, if USD CAD so chooses to, all right, or they choose to do this, let me just take this here. If I draw a blue line above the high, if the market decides to come up to here tomorrow, still within the same H1 area, but pushes deeper for this 30-minute supply liquidity, then that would be a good short as an induction of the previous day's high to give us at least a sell down to our point here, which is another 83 pips, right? Something like that would have been, or would be fantastic and be a very nice profitable trade for the day. Okay, so I'm watching that setup if that is going to happen. All right. Let's go further. So update on NZUSD. So it looks like the news didn't affect it too much. It didn't do really that much, but definitely looks like it is a short. Okay. And I'm expecting it to probably go further lower. So I'm going to watch these pairs and see. Now look, it's 4 o'clock now and I wanted to come back, just taking a little detour back to the dollar index. Have a look, guys. So you can see on here, we've had a strong H4 close. So the price looked as though it was going to stay in and bam, broke out and is pushing up more. So you have to kind of wonder, where's all this liquidity coming from at these, I wouldn't say a strange time of the day, but at these specific times of the day. Right now, I believe it's the London close, 4 o'clock, because it's 7 o'clock open, so 4 o'clock close, right? So that benchmarking period where all hedge funds take their pricing of that market close and everything like that from the London session, now price is pushing up even further. So now that it's closed clearly above equilibrium, then that means we're going back into discount pricing and we should see the market get to the next available supply zone area. So this liquidity void to the left, this is really the last one. These, I would say they are, I guess, nah, these are not, I wouldn't consider these to be liquidity voids because of the wicks that are surrounding the price areas near the body. This is definitely a liquidity void because of how the price is behaving. You know, we have a big range here. You can just take it out of the way. We have a big range right here between the sell prices and the buy prices being offered in that hour session. Okay, so just like a very sharp rundown. So I'm sure the price will want to make a sharp run back up. And if it does so, it's going to land exactly at the optimal trade entry 70 or OT 75. And then the higher up one, 78.986, right? So as a trade, it'll be a pretty good trade target if you're in the long, or if you're looking to take the short. So if that is the case, then there should be a little bit more strength on the dollar before one more sell. Okay. And it looks like this dollar movement, I don't see any high impact news for tomorrow, but we'll look again in the afternoon. But it seems as though it might take a little bit longer than Friday for us to get the complete sell-off that we're looking for. Looks like it's going to continue into next week. And so we're going to have to do our best to just, take that on our stride and go, basically. All right. So I'm watching to see what is going on. Right now, the dollar index is really pulling back quite strong. But I definitely think this is just a return to order block. On the lower time frames here, same situation. Liquidity void ends really about here. So you could even get in as soon as the price gets to 102.9098 or 100. Or you could wait for the exact supply zone area too. And that'll be it. I guess looking at the highs, I think they're pretty well defended. If the price was to come for the high of yesterday, it'll be a bit of a surprise. I think the accumulation that happened here and then the pull away from the price is enough. I don't think that in this case, the market will need to take these highs, but at least get into supply liquidity would be the optimal choice. So I'm expecting an OTE movement. As soon as the dollar index gets to the OTE, I'll be looking to sell off any, dollar pairs I have or any, other pairs for the long, which will be like gold, euro, USD. I'm willing to go for it. Okay. So yeah, before I leave you guys, you can see the dollar index, what it's doing is broken past this area on the 30 minutes, returning to the other side. So it should actually continue for a long. Hopefully OTE happens during this next 5-hour window left, or 4 hour and 55-minute window until it gets to 9 o'clock when this market closes. We may even get surprised even more when the market gaps up to open at OTE, because I've seen a few opportunities happen in that way, and then we can take it from there. Now, the only thing I would say is not really a cause of concern at all, but the H1 area shows this zone too, so we can even hone it down to the H1. But if at any point this H1 candle closes back beneath this supply zone, then we're going to have to come up with a different strategy of how the price is going to do what it needs to do. We'll have to find an alternative that would work to allow the price to, give us another form of entry if it closes beneath here. Right now, it seems to be aggressively pulling back, maybe to re-enter again. It's not really that strong. It's just filled a 1-minute gap here. And then it's left a 1-minute gap on the upside. So I guess this is just all low liquidity movement is taking place on my brokerage platform. Yeah, and then we should be going for a long. So let's see what happens here. We've got, 1 hour until the next H4 candle, which is what I like to look at. And then one H4 session left. Okay. After that, after 5 o'clock. So let's see. All right. With other stuff like USD CHF, as I said, it's not really important. You're just going to keep on holding and swinging that. All right. I'm interested in USD CAD, pound USD also. It would make sense for the dollar index to gain strength one more time so that the price will pull back a little bit here. And then we should be going for a short. So because of all these highs being taken, as I said, I do think that there should be a good enough short to take pound USD somewhere of a major area of supply, maybe fill this liquidity void, get some major area of supply until you get down to lower areas, then we buy again. All right, so this is kind of like the picture I've got going on with my pairs right now. That's what I'm looking at. If there's anything, yeah, I think that's it. Now, let's see what, as I said to you about USD JPY. Let's work out what the price is going to do and just hang in there and see. But for now, no trades for me. I think I'm done for the day. If you guys have any trades you want me to look at, you can always give me a shout. And yeah, I'll catch you guys later on. It's lovely as always to be live with you guys. I'll see you lot tomorrow. Everybody take care. And make sure you don't over risk and over trade.